Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. Well, we had a WASDE Report Friday, kind of a big data dump. We're going to break down what all those numbers have to say, but also going to look at it from a livestock perspective, especially when it is looking at the cost of gain for your cattle. We'll also talk about what's going on in this wheat market. They're kind of off in their own little world, an interesting perspective when we look at this wheat. After we're done talking about it, you might be questioning maybe some of your feed options as well. Well, stick around. We've got a lot to unpack on this weekend's episode right after this.
It may be small, but this little bean fuels power. It powers a food industry as a source of protein. It's a fuel that powers diesel engines while reducing emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
And welcome back once again. As you can see, David Ericson joins us again this week. He's with Ag Optimus out of Akron, Iowa, and Jeff Peterson with Heartland Farm Partners. And gentlemen, a busy week with a lot of highs and lows in the trade with an early close on a Thursday because of the National Day of Mourning for President Carter. Then Friday came. And it was just a data dump. And that's kind of where I wanted to start and get your takeaway. I'm going to ask each of you, and I'll start out with you, David. For you, what was your biggest surprise as you looked at those numbers from WASDE?
Well, when I looked at those numbers that came out from the USDA, I kind of asked myself and I asked my partner in the office, what took the USDA so long? The drop in yields that they put out were pretty significant in both the corn and the soybeans. So it leaves me kind of wondering, have they known this for a while, or did they just all of a sudden come to an epiphany a few days ago right before this report? Ending stocks are heading in the right direction. We're still not near, anywhere in the shortage area in the corn or the soybeans, but we're definitely becoming more and more manageable. So I think that's the biggest takeaway that I have.
For you, Jeff?
Yeah, so as we dig in the numbers, I would agree. The yield on the corn side, I don't know if we got numb to it last year. Last year we saw where the yields were at and really thought coming into the January report, we'd see those yields go down, and they didn't, and we got surprised and went higher. So this year coming in, it sure felt like the yields could come down. Internally, we were kind of thinking we could see corn yield down maybe a bushel, maybe we'd end up having beans down, thought it could be down probably, half a bushel to 3/4 of a bushel. But to have the type of surprises we did on the yield side was a really nice surprise. The other side of it, I guess, that was also a little surprise over on the bean side, the fact that we ended up lowering the production side, but then didn't change the demand, that was a little surprising to me. And then over on the corn side, I guess, the way they went ahead and adjusted the demand, where they physically went ahead and lowered the export side, it's like, well, I don't think that's going to happen. Over on the feed side, David, you'd have a better feeling on that, if it's going to have much impact or not. But those are some of the surprises that I ended up seeing, Susan.
So then, Jeff, to kind of follow up on that, what did you see as the most important information that was released from that report?
Yeah, I think as you dig in, there's always so much data, and you're exactly right. There's stocks, and we ended up even getting some wheat acreage numbers. It all gets back to the ending stock number. So as we dig into that ending stock number, and we always like to take it to that stocks to use percentage. As you take the look at the stocks to use percentage on corn, you're sitting down around about 10.1%. The nice part about that is that we're trending in the right direction. Is that going to be the lowest number we're going to have yet? Probably not. Going forward, I think there's still room for us to be able to increase some exports on the corn side down the road. Could we increase that yet? 50, 75 million bushels. Would it also be possible to increase the ethanol demand, maybe 50, 75 million bushels there? So we could even tighten that up more. So then when you go in and you say, okay, let's just say coming into that March report, we've got about a 10% stocks to use ratio. What could that physically mean? As we're looking at May futures at time, if we're sitting out there in the March report, thinking about bushels that we need to move, that starts pushing bushels towards the 485, 490 area, maybe even an outside chance that could even get us up towards the $5 area just based on the underlying fundamentals. Now we know the market's going to be looking at South American weather at that point, but that's a little bit of the most important information, at least on the corn side, Susan.
Well, David, if you're a cattle producer and you're looking at those WASDE numbers for cattle and corn, how do you see that changing the cost of gain, or is it something they need to really be worried about?
Well, I definitely think that it needs to be on the forefront of a lot of people's on the forefront of a lot of people's minds. Like Jeff talked about earlier, we had kind of become numb to the yield numbers and the production numbers and the large carryout numbers. So I think a lot of producers just got used to, and every producer is a little different, whether they have their own corn and how they figure in what they're paying themselves or if they're buying the corn or what have you. Everyone figures their cost of gain a little differently. But I think a lot of people got pretty used to, figuring in that dollar cost of gain, maybe $1.05 if they were trying to be conservative. Well, now we have July corn back up around 480. And I really think that this is going to increase the cost of gain for a lot of cattle producers if they don't have their corn needs already spoken for, whether on the futures side or contracted at the elevator or anyway. So we're going to be probably looking more at that $1.10, $1.15 cost of gain, maybe even some instances of $1.20. We'll kind of see how the growing season goes as we push through the summer. But there is a chance that we'll see some $5 corn. And, even comparing to $4 corn, that really tightens up the margin. And when you consider what the cattle feeder is already kind of paying for these feeders, the margins are extremely tight as it sits right now. And, that's just going to put an even further crunch on it if they don't have their corn needs already taken care of.
So then that kind of makes me think about the next thing we're going to talk about, this wheat market. Why hasn't it been trading strong? And you said you had an interesting conversation in regards to wheat as feed as well. So I guess it's a two-part thought for you.
Yeah, the wheat really makes a guy kind of scratch his head, even with, and there's nothing saying there's no rules written in stone that, the corn and the soybeans and the wheat all need to move in tandem. A lot of times they do, especially when you get big moves like we've seen today in the corn and the soybeans. Usually the wheat would at least come along a little bit in sympathy to that, but it basically just traded flat all day. So the question really becomes, at what point in time, in a lot of the country, there, a big portion of the ration that a lot of these feeders are using is mostly corn based or corn byproducts based or, what have you. It has something to do with corn. But at some point in time, and I'm starting to hear from a few different customers, more in the South and kind of on the West Coast where it's a little more feasible, that they are starting to work a little more wheat into the rations, to kind of cheapen that up a little bit because the wheat has not come along for the ride, even on this bounce that we had going into today in the corn. And, it just seems like a less expensive alternative.
So Jeff, looking at what the markets and everything you've digested from the WASDE and just in this conversation that we've had today, where do we see these grain markets then going forward? Because it does kind of loop back around to what David's talking about in feeding cattle.
Oh, it definitely does, very much so. So I think as we dig in, and let's just break out and start talking about corn first. Corn market, what we know is we came up in as we got up in that 472 area into March, and then we settled just slightly below that. But we ended up coming up into some major resistance levels. Those levels would have shown up back there in June. So we do need to continue to get strength in this market. We know the funds are long. I think the factor that we're going to see right now is that we're going to start watching South American weather even closer. And in particular on that safrinha corn crop, what we know is that crop hasn't got started yet, planted yet, but we're getting very, very close. So we've got a whole growing season there. One of the big things down in South America right now that I think we have to be concerned about is that a lot of the soybeans are going to come off. And when those soybeans come off in February, if we'd have some wet conditions down there, what could happen is that could slow up the planting on that safrinha crop. Now, the importance of that, it could cause problems with that soybean crop in regard to quality, but also the slowing of the planting of that safrinha corn crop then could push out further out there into April, latter part of April, even in the first part of May, when they physically are getting into pollination. We know that's a time they get into the dry season. So that's going to be something we have to watch close and see how that goes. Over on the soybean side, something we have to watch. We saw a big adjustment on the ending stock number. And as you look at it, that adjustment there still probably requires a little bit more of adjustment to happen yet in regard to the price. But there's a few things going on. We know that part of the reason we're at the level we are on prices right now is because of the dry conditions in South America. So we have to watch that forecast really close. Argentina looks like it's going to have some warmer, drier conditions over the next 7 days, but there is some rainfall that's showing out there in day 10, 11. We're going to have to watch that very close. The other thing we have to watch very close is that do we get some guidance on the 45Z? Now, there has been some talk on the 45Z, and then what that touches on is basically what there's going to be out there for the tax incentive as you're physically bringing soybean oil into the renewable diesel and also that sustainable aviation fuel. I was thinking we might see some additional stuff today. I think there's some promises we could see some stuff out as we get into next week in regard to the models and how all that works. So we're going to have to keep a very close eye on those things, Susan.
David, what about this cattle market? I mean, it was a strong couple of weeks for them. Obviously there's the hope, but can this momentum keep going in this next week?
Yeah, I think it definitely can carry into next week. A week ago today, we had a very similar situation to what we experienced on Wednesday as well, where the market, started off trading pretty strong and then ultimately reversed lower. And I think a lot of people kind of thought that, maybe the music could stop playing at that point in time. But it hasn't, and each time, both on Monday and on Thursday, the market came back even stronger. So those ultimately just kind of proved to be head fakes. And, quite frankly, the fundamental news is really strong right now. We've had boxes, choice meat has been up $7.88 over the past week. Select is up over $16 over the past week. Your cash feeder index has been really strong so far in the month. And I think that's going to continue just by watching what the sale barn activity has been. In cash cattle, like we've talked about, it was up about $3.60 last week, and it'll probably be up another $3.60 this week when we see the averages on Monday. So can it continue? Absolutely it can. But I do think that we are getting into, we're definitely getting into uncharted waters, levels that we have never experienced before. And, one of these times, those reversals are going to hold. I'm just not quite sure when exactly that's going to be.
Well, we unfortunately have run out of time. Thank you to both of you for joining us this week. A quick reminder to folks that commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And of course, information on the show is provided for educational purposes and not intended to influence legislation, government policy, or action. And that's another edition of the Nebraska Soybean Board Weekly Market Roundup.